Hi everyone, this is Craig from DBL Capital. You know, every few years a window opens and suddenly a type of deal that didn't pencil 2 months ago now works, but it doesn't last long. We're in one of those windows right now. Rates are volatile, lending standards are shifting, but behind the headlines, distressed opportunities are quietly emerging. If you don't have your capital structured and your strategy in place, you'll miss these opportunities. Today, I want to show you how macro shifts create fast-moving micro opportunities and what we've learned about being ready when they do. Every investor wants to buy at the bottom, right? But the truth is, markets don't bottom cleanly. They fragment, they confuse, they mislead. Some sellers get desperate early, others stay in denial until the pressure builds. And the big opportunity isn't when the headlines say, "It's time." It's when 1,000 small frictions create price breaks and forced decisions. Right now, we're seeing pressure from the Fed's balance sheet, unwinding mortgage-backed securities that are trading at heavy discounts. Borrowers adjusting to higher for longer rate scenarios. Builders are halting mid-project, and private sellers rethinking their pricing floors. This isn't 2008. It's not a crash, but it is a moment of opportunity. Will you freeze or will you seize this opportunity? The question isn't, is this the bottom? It's, are you positioned to act when the next dislocated deal lands in your lap? At DBL Capital, here's a principle we live by. It's not just how much capital you have, it's how available is your capital. See, understanding your capital stack is crucial to success in investing. When the right opportunity hits, you don't often get extended times to research and raise. The deal goes to whoever's structured to move now. This isn't just for strong markets or distressed opportunity. It's true in every market cycle. The best deals and the best deal makers always move fast before most people even know about the deal itself, let alone have time to figure out how to make it work. Real estate always lags the broader market. That's a problem if you're reactive in your investment strategy, but it's an edge if you're proactive. When rates spike or liquidity dries up, sellers don't adjust instantly. They hang on, they negotiate harder. Then 1 week, maybe next month, maybe next quarter, they crack. That's when we strike. But you can't plan your reaction in real time. You need a system that's built for timing without having to time the market. We're seeing it right now with in-process construction. Projects that were highly leveraged but fine at lower interest rates suddenly have no room for profit at higher interest rates. Now, you've got stalled properties, willing sellers, and built-in margin for anyone who's ready to step in. That's structural inefficiency becoming opportunity. Here's the deeper idea. The best opportunities are never advertised on MLS. If you're chasing individual deals when volatility hits, you're behind. But if your capital is already pooled, already structured, and your operators are already in motion, you don't just find deals, you attract them. At DBL Capital, we built our model for this exact dynamic. We don't try to time the market. We build margin into every deal and stay ready for moments just like this one. Right now, we're stepping into high margin opportunities that other buyers can't touch because their capital is frozen, distracted, or misaligned. The reality is we turn down a lot of deals. We're looking for the right deals. We're looking for hidden gems at either significant discounts or with significant upside due to moderate capital improvements. If you want to think more like an institutional investor, ask yourself these things. Is your capital reactive or prepared? Is your strategy dependent on market movement or does it create its own edge? Are you positioned to compound or just hoping to time a perfect entry? When the perfect deal comes across your desk, will you be ready or just watching? These windows of opportunity don't stay open forever. And they don't always come with warning signs, but they do come with leverage if you're prepared. If you want to learn more about how we're structured for capital readiness and operational margin, go to dblcapital.com and download the overview. And if you're serious about thriving in this market cycle and all those that follow, then subscribe here. We're building out a series of investor frameworks that you won't want to miss.